All right, traders, good day. Welcome back to the live room. Screen is good, voice is good. Give me a yeah if that's the case. Oh, yeah. Perfect, perfect, perfect. How was your weekend? Hope it was enjoyable. I'm excited to be back in the live room. I'm excited to start the less busy part of my year. I've made it through the murder block, as I call it. And now my time is somewhat freed up between now and August. Yeah. So I'm excited. Of course, that free time will be spent with doing other things for the business. But welcome back to the live room. First and foremost, before we get started, because I have a lot on my radar, I do see a few new faces. Do me a favor, type in a me, a yes. If this is your first time in the live room, that way I know whether I have to do my little introduction spiel or not. Perfect, perfect, perfect. Well, if you guys are new, welcome to the live room. It is a pleasure to have you. What you're going to witness here is basically my daily routine of breaking down the markets. So we're going to look at the markets from both a swing trading time frame or a swing trading perspective and a day trading perspective. Now that means the higher time frames and the lower time frames. And I'm going to show you the process in which I go through to break down the price charts, perform technical analysis on there, find potential trading opportunities, and every once in a while, a little bit less this year than in most. If you guys were involved in yesterday's private Q&A where we talked about how I'm only taking about half the trades I usually take, but every once in a while, we take some live trades as well. But the goal is to show you guys the process, right? Many of you guys are premium members. Many of you guys are going through the course material or the courses, and you're learning. I spoke to a trader this morning who is just starting off in the mastery. So he's made it through the cornerstone, made it through the foundation, and he's going into the mastery where we really start to talk about strategies. And this is the perfect place to really get some practical application of what you're learning. Again, it's cool to learn stuff. It's cool to see stuff, but it's a lot more beneficial when you can practically apply it to the live market. So that's what I hope to provide you. As always, feel free to ask questions. I don't mind at all. I would say this though, if you are new, and obviously you could be new to us here at Tier 1, but you could be a very experienced trader. But if you are newer to trading, try not to get overwhelmed. Realize that we are going to cover a lot here. I'm going to talk about basically everything we teach and even some more as far as tactics and how to handle situations. So you may hear some terminology that you aren't used to. If that's the case, again, just don't worry about it. There's typically about a 7 to 10 day learning curve where the speed of my analysis starts to slow down. You start to get more comfortable with the routine because you'll notice that I essentially analyze the charts the same exact way every single day. I'm very consistent. And the terminology starts to make sense. But don't worry about the trades. Worry about the process. If you are someone that is going through the courses, try to only focus on what you've learned to this point. So if you haven't learned about Fibonacci's yet, when I start drawing in Fibonacci's, just don't worry about it. Focus on price action and structure. If you are experienced, feel free to share ideas. We do a lot of idea sharing. One of the changes I've made to the live room is I try to look at, instead of just being selfish and looking at the pairs in my portfolio for my selfish personal trading reasons, I try to put together really a list of the best tradable opportunities in the market, regardless of if they're in my portfolio or not. But if you do have something on your radar that you want to share, feel free to do it. If you have something on your radar that you want me to take a look at, maybe you're like, Akil, I'm looking for a reason to get long here or thinking about getting long there, but I'm not sure, feel free to type it in. Either myself or our great community of traders can help you out. Sound good? Sound good? Perfect. All right. let's get started. I'm going to bring my checklist over here a little bit. I didn't put it on my tablet today, so just on the interwebs. But again, a lot of about 12 pairs on my radar today. 4, 5, 6, about 6 or 7 that I have in bold, so ones that I really want to look at. Let's talk about, let's go to Euro Yen first. Euro Yen, because Euro Yen has it's an interesting situation where a few things can happen. I know Gabrielle was looking at this the other day. But in general, with the Euro Yen here on the daily chart, this is where I always start. Identify. What are you guys seeing? Obviously, I think we would say that we are in consolidation, right? The market is moving sideways. But where would you say we are at relative to structure? Those are the two questions I always want to ask myself during the identify phase, right? What is the market doing? Where's the market at? What is the market doing? Where's the market at, right? So we are hanging out right at the close, right, of this big wicked candle, right? This is a big stinking wick. I hate it. I don't like it because it really shows me that the market can expand really all the way down to here. So there's really not a lot of opportunity I can do in here. But we are testing the close, and the close is important to me. You can see we've tested it once, we've tested it twice. As we go down to a lower time frame, a 4-hour chart, you can see that what are we starting to do, or what have we done at this level already? Again, that yellow line being kind of the zone. Yeah, we have put in a double bottom, right? Now, a double bottom is a more conservative way to take the trade, to take a trade if you're looking for a buying opportunity. I personally have concerns with the fact that this double bottom came back to test this level. In yesterday's Q&A, we talked a little bit about the toughness of being a trend continuation trader and a counter trend trader, and how you have to really put filters in for both. This is one of the filters that I have in, right? Once we kind of retest the previous new structure low, I'm no longer interested in it as a double bottom. But what is a way, if you're looking to get long, you're not interested in the double bottom, or you need a little bit more to be able to get involved, what is the next step, I would say, after the double bottom? What can you then look for? A 2618. And here's where things get interesting, right? Here's where things get interesting. Because, and we want to go down to hourly, it's going to be cleaner on hourly. We can look at it here. So we know that at 2618 we need to do this, right? We would need to break and close above the peak of our double bottom and then return to the 618. Correct? Correct. Well, here's what else we have here. Check this out. If I take an X leg from here to here, swing high to swing low, X to A to B, B to C, and a CD completion right up here, that's going to give me a potential bearish Gartley. Now, traditional targets for a Gartley pattern are what? Excuse me. Hoping my voice stays alive. Traditional targets for a Gartley pattern are going to be your 3D2 Fibonacci retracement and your 618 Fibonacci retracement. If you're a traditionalist in your 2618, that 618 retracement is where you're looking to get involved. So we could have a situation where price action rallies up, you get triggered for a short on a bear Gartley, target ones come off at your traditional target 1, and then at your target 2, you do what's called a stop and reverse, involving you in the 2618. And of course, that's if you're a very aggressive trader. Obviously, you want to follow your rules for how you do the 2618. I know some people are aggressive and simply put a limit order at the 618. Others use the 618 as kind of their trigger point, where it's if the 618 is hit, then I look for X, Y, and Z to take the trade. But is anyone familiar with how a stop and reverse works? And we've mentioned it all the time, but I don't think recently. Is anyone not familiar with the term SAR, stop and reverse, stop and reverse? Don't be shy. It's okay. We don't judge here. So what a stop and reverse is, it's basically you're going directly from one position to another. So let's say you are trading this Gartley and you're taking a 2-unit position, right? You're trading 2 contracts, right? So 2 separate targets, right? How much of your trade do you take off at target 1? Yeah, target 1 is half, right? So you would minus 1 contract, leaving you with how many left? Leaving you with 1 left, right? So if you're a very aggressive trader, what you want to do here at the secondary target is 2 things. 1, you want to exit the remaining position that you had on for the Gartley, right? So in order to exit that remaining position, you would have to, right, you're selling, you have to buy 1, correct? To completely be out of the short trade, your Gartley, you would have to buy 1, right? But 1, buy 1, Akil. Buy 1. Now, if you wanted another 2 contract position going the opposite way, you would have to buy 2 more, right? To put yourself in that normal 2 contract position. So what you would do here is you would put a buy limit order of 3. Does that make sense? 1 buy would collect you profit from the short, and the other 2 buys would put you in a 2 contract position going forward. So it's called a stop and reverse. I'm sure there are other fancy names for it as well, but essentially is what you're doing is you're going from one position directly to the other position. So again, would be pretty cool if it happens. Doesn't happen too often, but again, if you're obviously a Gartley trader, if you're a 2618 trader and you trade it in an aggressive manner, this is one that would make perfect sense, just simply because that target 2 area for the Gartley is usually the 618. That's what most people trade it at. The 618 is also the place that you're looking for in the potential 2618. So something to look for here on Euro Yen. Any questions about this? I thought that was pretty cool. I get it every once in a while where we'll be like, I'll have a pattern within a pattern, and you'll see that one pattern completes, and I'll go directly from one pattern formation to another pattern formation. So it's not too often, but every once in a while. Now, something else you want to pay attention to here, that's the main thing that's on my radar. Something else you want to pay attention to here is a potential break of structure. So another thing you look for is a break of these structure highs. And this is going to be probably more lower time frame. But if we break these structure highs here, then you can anticipate a move up. So for a shorter term trader, right? I know it may not seem like much, but for example, we have a 124 even handle here, right? For a trader on the lower time frame, there's a lot of room between 123.64 and 124 even. There's 35 pips in there. For a day trader, that's plenty. So that's another thing we want to pay attention to. Is that, but we got to get to that level first. So higher time frame traders, I would look for that Gartley first and foremost. Again, if you're more of a breakout trader, keep an eye to see if we can violate this 2360 level. And again, you can either look for a breakout past that level and a continuation up to 124s, or of course your breakout, your retest, and your continuation up. So that may come later in the week, but certainly something you want to put on your radar. Not going to be much on the 15 or the 5. Let me mute my phone. Hold on. I keep forgetting I'm far too popular. Not too much on the 15 or the 5. We may be putting in sort of a wedge pattern here. So we may even see a smaller breakout from this level. If that's the case, we can anticipate a move up to these 123.57s for you breakout traders. That's something to keep on your radar as well. Let's get on to the 5-minute. Yeah, so I would say if you are a breakout trader, right? Essentially what we have here is a pennant pattern, right? Market put in an impulsive leg, not your greatest looking one in the world. But you can see we're consolidating, right? Our range is getting smaller and smaller. As we keep coiling, we are likely to break out one way or the other. Now, again, you never know which way we're going to break out. In this particular formation, we typically break out in the direction of the previous impulsive move, which would be an upwards move. So if you are a breakout trading, and if we're going to break out higher, where would I anticipate us going to? A retest of our highs up here. That's the next level, 123.50s. That's the next level of previous structure resistance. So that is actually worth keeping your eye on as well, especially if you were a breakout trader here on the Euro Yen. And range bar charts actually doesn't really give us a clearer view, a little bit of a worse view on the range bars. Look at that. Usually the range bars give you a clearer look. Not always. Much clearer here on the 5. Questions on Euro Yen. Pretty appetizing pair. Lots of opportunities on it. Any questions? All right. Moving on. Let's head over to, and he says, it's my first time here, but I think this is the place to better myself. It most certainly is. I had a really good friend of mine. He's a doctor originally from France. He's out in Colorado now. One of the most brilliant minds I know. He's a trader. He's too smart for me to understand. But I know he's a brilliant mind, David Alcindor, and he always used to refer to this as he called it hitting the speed bag, right? He wasn't a day trader. He was a very long-term swing trader, but he would love coming into the live room because it's just reps and reps and reps and reps, right? And that's one of the cool things about trading, right? Trading is a skill. It's a skill that could be developed like any other skill, right? If you want to learn how to shoot a basketball, right? Or I guess shoot anything. You shoot a gun as well. You practice. And the more repetitions you take, the better you get, right? The more repetitions you do, the better you get, right? The more repetitions you do, the better you get. So the fact that we come in here every day and it's monotonous because the analysis is the same, it just ingrains good habits in you, and you continue to develop it. It's amazing. It's done. I've noticed a direct correlation once I started teaching to really how much more I improved as a trader, simply because there are so many reps in the market so many days. So this is certainly the place for you. All right, let's go to, I have a 26.18 on Aussie dollar as well. Let's check out Aussie dollar. It's weird. There's so much I want to look at, which is it's beginning of the week it happens, but usually this year it's been like, oh, nothing. But I have a lot on my radar today. And something that I did have on my radar was a 26.18 on the Aussie dollar, and this was more for Gabby because I know she was watching this. But the Aussie dollar, and this is something that we looked at yesterday. The Aussie dollar is a pair that, once again, is in the middle of no man's land. I don't trust any of these pairs within these big wicks. I don't have my VS1 levels on today, but if I did, and for you guys that have them on, you're probably seeing a VS1 level that looks like this. So again, there's just, in my opinion, there's no, from a higher time frame perspective, there's no safe place to put stops. So I'm not all too interested in there. But as we dig down into lower time frames, there may be some conservative reasons that we can look to get involved. And this may be, we may find one of them here. Lash says, yeah, on my day trading radar was like 7 pairs this morning, took 2. I had 12, well, not on my day trading, but in general, I had 12 pairs that I was interested in. 12! Euro dollar, pound dollar, dollar yen, euro yen, Aussie dollar, New Zealand dollar, Aussie yen, Canada yen, New Zealand yen, which those three pairs are basically the same thing, so they can count as one. The yen crosses, Aussie yen, Canada yen, New Zealand yen, they're all the same pair, essentially. Aussie, New Zealand, platinum, dollar Swiss. So yeah, it was a busy day. I learned that lesson the hard way about trading too many of the minor yen crosses. Yeah, yeah. Learn that the hard way. George says, looking for dollar yen short here in a few minutes. Make sure you tell our traders a why and a time frame, George. That way they're more informed about what you're looking at. Got any idea on gold? I did. The idea we had on gold actually just played out. We had an idea going into the end of last week, and it played out. So now it's back to the wait and see. We can look at gold as well. We were looking for, very similar to what I talked about on the euro yen, we're looking for a break of structure and a breakout to a 1-to-1 measured move, and the market did exactly that. Now we have to wait again. Now we have to wait again. All right, so let's dig into to Aussie dollar, and again we may miss some of these opportunities here, but Aussie dollar, speaking of 2618s, right? You can see we're coming down here to the 240 chart, or coming down to retest previous structure lows here on the 240 chart. Now, again, we're in the middle of no man's land. Just you got to keep that in mind. So, in my opinion, you want to take a much more conservative approach. Real quick, Mitch says, "Hey, Akil, I read that the crosses are typically a little smoother and better for beginners and less susceptible to spikes compared to the majors. And thoughts?" I disagree. I disagree. I disagree. I think it's much more. I think you're better off trading the majors, quote unquote, whatever you define the majors are, because you can look for stuff like, for example, if you're probably referring to pound Aussie as a minor pair, a pound Swiss as a minor pair. Those pairs are not for beginners. Euro Aussies. The low liquidity pairs are actually going to cause you more harm, in my opinion, because there's less liquidity, there's going to be more disruptive movement. Does that make sense, guys? Right? We talk about, I always warn you guys, don't trade news for like New Zealand and Aussie during the Asia session. The Asia session is slow because no one's trading it, right? The two major sessions are London and US, and both of them are asleep. So when you have news spikes that come out in those periods on those pairs, no one's trading it. So you see these massive moves, which don't necessarily need to be these massive moves, right? They could be normal moves, but because no one's trading that pair, or less people are trading that pair, and less people were trading that pair at that time, they have a much bigger footprint. So I actually think the opposite. I think you're better off. You rarely see any kind of, aside from your normal news event stuff, you don't really see any really funky stuff on your euro dollars and your pound dollars. Again, aside from like, the Brexit stuff and the normal stuff that happens that will destroy any pair. But you don't really see any out of norm stuff on the majors in comparison to the minors. But it also depends on, I think a better way to look at it, if you want to look at something, is probably just look at the ATR. Pairs with really, really high ATRs, you're probably looking at a much bumpier roller coaster ride. Pairs with lower ATRs, a much smoother ride. Doesn't necessarily make it better or worse to trade, but a little bit less action there. It's a really good question, though. All right, so Aussie dollar 240. We know that, Aussie dollar 240. We know that we're kind of in no man's land here. And I apologize real quick. There's nothing on the radar, but out of habit, I'm supposed to do this for you guys. I do it for myself every morning, but there's nothing aside from a single Fed chair member speaking, but kind of got right into it. News today, nothing. Okay, FOMC member George speaking later today, but there's no really major news events on the radar. Part of the routine. I do it myself personally. I try to do it with you guys to give you a heads up. I just forgot this morning because I got so excited to see so many new faces. But you see Aussie dollar, we're starting to hold a level here. I don't want to say we're at structure because we're inside that bigger zone. But we're creating a level of structure. And as we go down to a 60-minute chart here, an hourly time frame, you're going to see that we're getting multiple holds here. So not only have we come down and we've created, what is this called? A double bottom. Hey, Chris, just talked about a wedge pattern on Euro Yen. Saying to myself, Chris would be interested in that. Not only have we created a double bottom here, but we've broken and closed above it. We've retested, giving us what type of trade? 26.18. Now, something that is very visually appealing to me, for you guys that have taken the foundation course. Notice anything? Anything stand out to you? Any little bits of knowledge that you are now aware of that you might have potentially overlooked previously? Yes. Look at the flick of the wicks. Yeah, look at the wicks. Look at the wicks on these candles. When we get involved in reading each candle, we understand that each candle gives us a story, right? If we had to create a story for these previous 3 candles, right? The story that we're creating is that, well, sellers tried to push down. Was there any follow through? James says all of those nice wicks after you would be entered in a trade. Not necessarily. Depends on how you trade it. Depends on how you trade 26.18s, James. Sellers tried to push down and there was 0 follow through. Repeat. Sellers tried to push down, 0 follow through, right? We ended in the upper third. Same thing. Sellers tried to push down, 0 follow through, and ended in the upper third. Now you have a doji, right? A doji candle is more of a what? A sign of indecision. So the buyers tried to push up, but guess what? They got rejected as well. Sellers tried to push down, but guess what? They got rejected as well. What would be, if you're looking to buy here, what would be a positive sign to come? If you're someone that's looking to get long at this level, a higher high, higher close. Yep. So for the buyers to be able to push up and to be able to create a new high, right? A higher close above the previous one. Because we haven't been able to do that yet. We have not been able to do that yet. That would be a positive sign there and could even potentially be an entry reason for you if you're banking on this pair going higher. And again, and why I said, James said all this after you entered the trade, again, you may not be in the trade. In this situation, you're only in the trade if you're putting an aggressive order on the 618. Right? But not everyone trades a 26.18 that way. Obviously, that's the most aggressive way to do it. But I don't personally like that way. But some do. So it really depends. So something to keep an eye out on the 60-minute chart here. Obviously, all that indecision looks like this as we go down to a lower time frame. Let's see what a range bar looks like for Aussie dollar. This is another one I was looking at, euro, or I thought it was dollar yen. Let's see what a range bar looks like. And we had the dollar yen next. George was looking at a entry there. Range bar chart, you can see a slightly different story. You do have your higher high, higher close on a range bar chart. So if you're someone that's able to go down to a 5 range, boom. Here's your move again. Because range bars don't print on time, they print on movement. We don't have all those kind of doji candles. We have a lot less. You have a higher high, higher close right here. Now, the question you're asking yourself is, Akil, you probably ask yourself, Akil, why aren't you interested in this trade? Any guesses on why I'm not interested in this trade? I'll give you a clue. IPDE. I see stops. I see risk reward. Anything else? Structure? Yeah. Essentially, it's going to be the simplest thing possible. I have no reason to believe that price is more likely to go up than down. You add on to the fact that, again, we don't have a good stop loss. Now, 2618 is a very conservative way to get involved. But our stop loss is not at a safe level. But in general, I have no reason to believe that price is more likely to go up than down. Not enough reason, I should say. So, not a bad trade at all, guys. I don't think it's a bad trade at all. Just not a trade for me. And that's the thing that you guys are new to the room. You're going to have to remember. Just because I'm not a fan of a trade doesn't make it a bad trade. It could just be a trade that I can't get involved in. George is leaving just as we're about to go to dollar yen. We'll hold off on dollar yen then. Any questions about Aussie dollar? Good example, candlestick wicks. If you are looking to take this trade, again, it may be, depending on where you're shooting for, it may actually be hard to get involved, right? Because if you are looking for a higher high, higher close here, and if you're taking targets at a retest of the highs and not a continuation target, your risk reward is going to be quite inversed. So it's going to be hard to get a quality risk reward unless you're shooting for an extended target. And again, this yellow line, I would have no faith, me personally, if I'm taking this trade, of us going past these previous structure highs and going higher. Tried to buy this pair at 69.77 support on the 4-hour time frame on Monday and failed. Was it a good trade? And of course, a good trade meaning you followed all your rules to the T. 69.77 is this level right here, retest the structure. Then well done. Well done. I congratulate you. And again, just my perspective, we spoke about this a lot yesterday. These pairs, it's just hard. It's hard because of this. We don't have a, I mean, we look at this level. You said 67 right here. And it's hard because we have this level of structure, but looking left, where's our major structure at? Is it at this level or below this level? Yeah. So we're dealing with minor, I mean, if you're taking a trade based on this structure, you're dealing with minor level of structure. Again, doesn't mean that you can't take the trade. Doesn't mean that you can't take the trade. Obviously, you can take it, but understand that we're not dealing with a major level of structure. If we had to pinpoint major levels of structure, obviously down here this is the key level. This is, unfortunately, this is the key level of structure all the way down here, 67.44. But I would actually like this level that we're currently at more than the higher level. And why is that? Why would the lower level be more important than the higher level? The red level versus the yellow level. Ketchup and mustard. Ketchup and mustard. Yeah. If we, and again, we want to make sure, I know everyone trades different time frames. We want to make sure we have perspective, right? This is why I love going to the dailies first, right? We look at this yellow level and we have minor structure here, right? We have previous structure lows. We have a pullback. We have a retest of these structure lows right here. And then, we have a pullback here and we have another retest right here and some indecision, right? Not necessarily a setup that screams buy to me. Mainly because we don't have that major level. Mainly because we know that if we look left, we have a much more powerful level of structure right here, right? Because this is the close of that big wick. And something I've learned throughout my years in the market is that when we have two levels of structure that are basically on top of each other, typically the lower level is the one that is more important, or the whatever the furthest is away. In this case, the lower level, if this were a selling opportunity, it'd be switched, obviously. So usually the one that's further away is more important to me. So again, that's something I've learned through experience, is just to always look for those overlapping levels of structure. I've fallen victim to that again. Maybe it's something you can use, something you can start looking at as well. But like I said, the trade met all of your rules. Good trade. Good trade. Here's a secret. I traditionally lose about 45% of my trades. A little bit better this year. A lot bit better. I don't know why I'm hitting so high this year. Maybe because I'm taking so little trades, so the sample sizes haven't evened itself out. But I typically lose 45% of the trades I take. To put things in perspective, I'm a 55% trader historically, 67% this year. But I also have my losses are bigger than my wins this year, which isn't something I'm proud of. So, all right, let's head over to the dollar yen next. Dollar yen on the daily. The daily chart here was looking at a rising channel here in my radar this morning. And let's see what has changed since then. All right. So dollar yen, right? We are still, here's our structure zone down here, our next level of structure. We do have a 109 even handle. I actually didn't pay attention to this morning. So we do have a psychological level right here, right above that zone. That is going to be important. So you can actually say that we did run into structure here. So we do need to take that into account. That wasn't on my list this morning, but I'm glad I saw that. But essentially what we can be looking for here is a pullback trade, right? So you can see my zone of structure down here, right? We do have room to go lower. We do need to take into account this even handle number. And previously on dollar yen, we've had levels of structure a few times at this zone. That's the best part of like watching shows. I used to love that. I used to. Anybody watch the show 24? Jack Bauer, and then Black Jack Bauer. Right? I used to love that. Previously on 24. Doot, 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 doot. It was a whole show based on 24 hours, and they had this countdown clock, and it would you'd be all urgent and stuff like that. It was good. Black Jack Bauer was good too. I like that one. In fact, they're bringing back. I was happy. I saw this the other day. It got Designated Survivor got canceled, which I like that show, but Netflix picked up the 3rd season of it, which I'm happy because all of the shows I like tend to get canceled, unfortunately. Maybe that says something about my taste. But 3 levels of structure at the same place, right? You guys see it? 1, 2, 3. And now price action is returning. Yeah, or the end, yeah. Now price action is returning to this previous level of consolidation. So if you are a trader looking to get short, this would be the area, this would be the zone that I would be looking to get short in. Classic pullback type of trade. So let's head over to the 60 and down to the 60-minute chart. Here is what I saw, right? We have a rising channel coming up into this level. And I am actually going to get short this because we did have that lower low, lower close. So let's get short at market based on this lower low, lower close here. There we go. Probably should measure this out first, but it shouldn't be too much difference from this morning. 70, 80, yep, 88, about the same thing as this morning. And I'll walk you through it later. Let me just make sure I don't make any goof ups here. And then I'm looking for a move back down to 109.16s for my target ones. And I'll be looking for an extension for my target twos. Yep, 108.50s. was the level. And I'll walk you through this in a little bit. Let me just make sure I get everything on. Why did I think it was on a 4-hour chart? I'm glad you brought that up, George. I was waiting for a 9 o'clock candle. Here we go. So, classic pullback trade. Market started to lose momentum, right? 2 high momentum bullish candles. Boom, kaboom. You guys know how I feel about these levels, right? What type of candle do we have in this zone before I point it out? An elephant candle. For you guys that are unfamiliar with the term, I don't really like to talk about supply and demand simply because I feel it confuses more traders than it helps. So I just call them elephant candles, right? Supply and demand zones, I call them elephant candles. Basically, if I were to hide an elephant in my room, would you be able to find it? Probably, right? It would probably stand out. So whenever, I've got a big office, man. What can I say? So whenever you see these big candles that just stand out, like you don't have to look for them. You're just looking at a candle and like, holy, right? I call those elephant candles. The consolidation zone, and I don't know where I got that from. I don't know if I heard, I doubt I made it up because I don't think I'm that clever. I probably heard it from someone. Maybe like the elephant in the room, that thing. But I like looking at the consolidation zone before it. These are typically good levels of supply and demand. So that's, if you hear me refer to the elephant candles, that's it. So I'm actually going to increase, because I have the risk reward. I'm going to be able to increase this a little bit so I can get above this 1010 even handle, right? I don't have the risk reward for that. That's why I didn't do it in the first place, Akil. Nope, I didn't have the risk reward. Yeah, it was just short. All right. That's what I wanted to do. Let's take that back then. I wanted to increase it and get above here. I just don't have the risk reward to make that work because I'm shooting for this level instead of that level. But we're looking at a retest of this level. We see a loss of momentum there. As the market starts to come off 2 high momentum candles, it starts to really kind of lose steam. And hopefully we see a push back down into this level. Right? Something else that this could form a head and shoulders. That we don't know. Right? We could see this. We could see this. This could end up being a right shoulder. We could have a head and shoulders, which is a classic reversal pattern. And we'd anticipate the market heading higher. You can't get scared out of it because we don't know. That's the difference between trend continuation and counter trend traders. And there are going to be differences of opinion. There's going to be different setups that help either trader. Unfortunately, that's trading for you guys. Right? The market moves off of disagreement in price. That's why the market moves. Get used to it. So let's dig down to a 15-minute chart here. This was available in the range bar charts as well, not as smooth. 15-minute chart here. You can see that we also have a very small advanced pattern formation. Probably too small for your liking. But if you're someone looking to get long, potentially an excuse to get involved. You can see a bull Gartley at market 109.55. I did not get filled the pound dollar cipher. Nope. I am at 129.21. So hopefully I get filled on this red move. But the market reversed literally right above my order. 129.23, so I did not. But we'll see. We'll see. I'm actually not excited about getting filled this anymore. One thing I'm a big believer, and I'll bring up the pound dollar cipher in a little bit. I'm a big believer in good moves. Good moves don't last. So it is a very negative sign for me when I see the market consolidate right before an entry. When it consolidates right before an entry, that means that the interest was right before my entry. And if we were to go back down and break through that level, that's not necessarily a good sign for my trade. So I actually have a very pessimistic outlook on this pound yen potential or pound dollar cipher. My hopes is that we either spike down and get filled and end up like a pin bar, or we just reverse right away and I never get filled. But typically it's not a good sign. Same thing with like support and resistance trading. You'll see me. What I mean is like this. You'll see me do the same thing with support and resistance trading. Let's say we have a level of support or level of resistance up here, right? I hate when the market does this. Right? You guys ever see this? It starts playing around right below that level. Right? Yeah. For me, that tells me there's interest here. Not as much interest there. And when this breaks, not only does it mess me up for target taking on this particular type of trade, but when this breaks, there may not be, because traders have been skunked out at this level, may not be as much interest there. So not always a positive thing, but it is what it is. It is what it is. All right. Dollar yen on the 15. Again, Gartley pattern. If you're into that sort of thing, not a lot of potential pips because the ATR is so small. Let's go down to the 5. You can see the same thing. Let's head over to the range bar chart. And again, you can see it. My notes are gone, but had the same thing, rising channel on here this morning. Again, not as smooth as the hourly when I took it on, but you can see the same type of deal here on the range bar charts. So we shall see here. One of the cool things about range bar charts, and I know George, you're looking into them again. You can do higher ones. You can match it to the ATR. So it's like this trade for me at least was taken on the 60. I believe you took it on the same thing. The ATR in the 60 is about 11, which is very, very small. If you wanted a range bar chart equivalent to the 60, an 8 range is going to be very close. You can even go to a 13 range or 130 or 13. I like sticking with fib numbers, but you can even do the actual ATR. And then what you can do here, let's just go back to the 8 range. This may allow you to trail more aggressively than the 60 minute. So in the 60 minute, you may not have a reason to trail. On the 8 range, you may see some more kind of wiggles down here that give you the opportunity to get that stop loss and trail it down. All right. Questions on dollar yen? Catch some low. Yeah. And I love it. I mean, this is, as for active trading, I love it because again, we can get a candle that looks, I mean, it's gonna be hard to see, but this candle is gonna close for 40 minutes. This candle is gonna close for 40 minutes, right? A lot can happen in 40 minutes. If I have an opportunity to see this and I can get my stop loss, I'm at 88. If I can get my stop loss from 88 down to here, which is basically break even, I've just reduced all of the risk on my trade. Does that make sense, guys? I've reduced all the risk. It is essentially a freebie trade. Now again, there's you guys that have been through the courses, you know there are pros and cons. There are pros and cons to trailing stops, right? The pros are that, well, you can reduce risk. You can be in freebie trades. That's good. What are the cons? Pound yen has a similar setup, but there's not the same type of potential to go lower. Yeah, the cons are it can bounce around, stop you out at break even, play around, and then drop and hit your initial targets. And now you're like, man, coulda, shoulda, woulda won that trade. So there are, you know, it's like anything else in life, right? You know, there's typically nothing that works out 100% in your favor. There's always a risk reward element to it, especially for you guys that heard the podcast I just did. There's always a risk reward to doing it. You run that yellow light, you'll get to where you're going quicker. You may get whooped, right? So it's all about measuring that risk reward. All right, let's take a break here. Crypto Chris says, great call yesterday on the bull move. Thanks, man. I was happy and then upset too. I was going through my analysis yesterday for you guys that were on the platform. I was popping ideas into that trade log like it was popcorn, pop, 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 right? And then I'm like, you know what? All these moves are going to happen during the London session. Because I'm doing this, I think it was in the afternoon. I had to be doing it, late afternoon or early afternoon. I'm like, all this is going to happen in the London session. I know it. Those sneaky London traders are going to take all my opportunities. And I woke up and I'm like, ah. But it happens. It happens. It happens. All right. So let's fire off our first break. Any questions before we do that? Nope. Oh, sorry. Side note, you know Jason Stapleton has a podcast course? Yes. Yes, I do. He's got a podcast course. He's got an influencer course. He's got another course too. I don't know. George says twofold to get in. Tell him you work with me, George. Tell him you're a tier 1 member. He knows who I am. I love Kevin Durant. You know my name. You know who I am. No, seriously, do that though. And he supports everything we do. I support everything that he does. So if it's if there's a way he can get you in, just say, hey, I work with Akil. I'm just wondering, trying to grow my business and blah, blah. And Jason's got a great heart, man. So he may be able to get you in. So do that. But yeah, I have no doubt. It's a great course. I haven't taken it, but being there as Darren and him really developed their podcast from scratch, he knows his stuff. He knows his stuff, and obviously he's a great business mind, great influencer. So I think it's a good place to go. And he's shameless. He's so shameless. And then give me some tips. All right. Yeah. So let's take a break. Put 13 minutes on the clock, and not 37 minutes. That's too long. Man, I don't have a 13-minute break anymore. Here we go. Been learning about and that's really the one that taught me about I government politics. I know nothing. I learned a lot of that from listening to his podcast and just really simplifying economics. Does Darren work elsewhere from trading and T1 as a father? Works as a father. That's the full-time job. Yeah. Works as a father. No, not to my knowledge. I know he does a lot of community work. And really, honestly, what we do here is trading is a way to do other things that we love. So we spend, aside from the massive amount of time we spend working on trading and all the stuff we do here, we try to fill the day with just value. How can we provide value? How can we just live the fullest life, whether it's being with our kids? You guys know I love coaching track and field. So that brings me joy. It allows me to have an impact on a lot of people's lives. Gets me out the house as well, which is good. So yeah. All right. 13 minutes. And I'll see you guys in a little bit. All right, gang, a few seconds left, but we'll come back a little bit early for round 2. If you guys are just coming in so far today, and correct me if I'm wrong, but we've looked at the euro yen. We had a double bottom slash potential Gartley slash potential 2618 and talked a little bit about stop and reverse. We then looked at the Aussie dollar on the hourly, which was also putting in a potential 2618 trade. And then lastly, we looked at the dollar yen. I was able to get short on the dollar yen and am involved in a trade there. So 3 pairs so far. Where I want to head to next. Lash just mentioned New Zealand yen. Let's go here. New Zealand yen. Mentioned it earlier. I had 3 yen crosses on my radar. New Zealand yen, Aussie yen, Canada yen. They tend to move very similar. This was a lesson I learned a long, long time ago where I was trading a bunch of yen pairs in a trend continuation strategy, and all of them lost at the same time. I lost a lot of money. And then all of them reversed and rallied at the same time. And because I was still, I had a breakdown basically after losing a lot of money, I missed the chance to gain even more money back. So learn my lesson about trading too many yen pairs. What I typically do is I try to have no more than 3. So I'll kind of plan out. I'll pick one of the 3 if I were to say back test all 3 of them, because one move is going to be, or a move on one is typically going to be the move on the other 2. But let's start on the daily. And by the way, if you notice in that squiggly line at the bottom, which is new, typically I only have an RSI as the only indicator I use. Aside from that, I am a naked trader, bow chicka wow wow. But I am, you guys know that my second favorite indicator is the stochastics. I do plan on doing a little bit of testing on the stochastics some more during the summer. You'll see me do it during the winter. You'll see me do it during the summer. So that's why it's on there. But for right now, ignore it. It has nothing to do with anything I trade. Just worry about the white line. But the white line is an RSI. The squiggly wigglies are the stochastics, and I'm playing around with a few different variations of it. I typically don't like doing the traditional method, so I like to see the differences. But New Zealand yen, and actually this is not, was this on my radar? Gosh, why was this on my radar for trend continuation? Okay, so I had New Zealand yen on my radar for trend continuation, but I feel like it shouldn't be. I'll go back to it because that's the one I know Lash wanted to take a look at. But yeah, this one shouldn't be on my radar for trend continuation because unlike Canada yen, right? You see how Canada yen, guys, we aren't really at the closes of this big wick, right? That's around 80 cents. We're trading above 81. And even with Aussie yen, I believe should be in the same boat where you see a little bit of breathing room between the closes of this big wick. New Zealand yen is right at it. So I might have just not looked deep enough for that. But we're here, so we might as well continue doing it. Let's look to the 240. Lat said there's a very nice head and shoulders on the 5-minute. But 240, again, you can see us coming down into the close of the big wick candle and retracing off of it a little bit. So a little bit of a pullback there. Let's bounce over to the 60. And you can see it's a very similar situation. You know, this is essentially, guys, is this any different than the dollar yen? Right? Essentially the same things. That's why I say these yen pairs, these yen crosses, they tend to look very similar. So it's basically the same thing as the dollar yen. So let's head down to the 15 real quick. And you can see a head and shoulders on the 15, right? Price action has been an impulsive move up. We've then retraced. We've then extended up, creating a head. We then retraced. We've then extended up again, creating a right shoulder. So you have right shoulder, left shoulder, head. You guys know how I feel about the RSI here. Look at that, steadily shifting RSI. Right? We don't have, again, ideally in the stock market, you would use volume for this. You want to see the decrease of volume and then the increase. We don't have volume in the Forex market, despite what anyone tells you. So the closest thing we can get is using momentum indicators, right? And the RSI is our momentum indicator. You can see at the top, what are we steadily doing as we go from left shoulder to head to right shoulder? Is momentum, bullish momentum, increasing or decreasing? Decreasing. And then of course with the breakout, and this would be an interesting thing to look at the stochastics. With the breakout, we see that cross below the 20 line, which again, many people look at the RSI in the sense of saying, oh, it crosses the 20. That means that the momentum is gone from the market. Where in reality, crossing the 20 line actually means what? It means high momentum, lots of selling pressure. Now, lots of selling pressure may mean or may lead to a retracement, right? But it's a if you're a breakout trader, and I'm not a breakout trader, but if you are a breakout trader, it is actually a positive sign. It is actually a positive sign. Andrew says, why is there no volume in Forex? Chris responds, Andrew, there is no central bank / broker, so we cannot measure it. Yep. That 100% correct. Yep. So you can measure volume from your individual data provider, but it's not going to give you a full picture. Yeah. So part of the game. And people complain about it. There are fake volume indicators out there. I've never looked into any of them, just because I just don't see any point. But yeah, it's one thing that stops. One negative of the Forex market. And that's why you can't do, you can't really watch the tape the same way you would do in a stock market, where, in a stock market, you got a level 2 up. You can basically see when orders are coming into the market. You can do that in a sense in Forex, not to the same degree, because you're only seeing orders from your particular broker or whatever like that. But it is what it is. So yeah, nice head and shoulders here. Obviously, the breakout has already happened. If you're looking for a reason to get involved, you can look for a pullback and then a continuation down. Again, the question you're going to ask yourself is, where do you think price is going to continue to? Are you aiming for, let's say, a move to this inside level of structure, or a move maybe lower to this outside level of structure? And that way you'll be able to see how, if, or can you got involved. That said, I've got target 1s at 71.90, so right at that inside level, and target 2s at 66s, right below these lows right here. Yeah, not a bad situation at all. I would be interesting to see. I'm just curious here. Let's take a look on a range bar chart real quick. Hopefully I don't break it. Do the range bar charts give us any type of kind of a different look? Nope, basically the same. If anything, you'll get the breakout a little bit quicker. So if you're a breakout trader, you breakout traders, let's see, on the 5-minute chart, you're getting it about right here on this candle. So about 8:20. And if you're trailing at beyond the top of the breakout candle, you're looking at stops about right here, 72.14. So again, you're looking at an entry here. If you're a breakout trader, if you're trading a breakout candle, you're looking at an entry of 72.06. Stops above that candle somewhere around 72.14s. Range bar chart's going to make it slightly different, right? You're going to have your breakout, same 8:15. So one candle earlier, essentially. Stop's probably going to be about the same level. So essentially seeing the same, very similar situation here on the range bar. Then the 5-minute chart, again, in my opinion, just makes it a little bit more smoother, but essentially you're looking at the same chart here, right? Inside structure there, outside structure here. 618 in there. Oh, baby, yeah, look at that. Cool, good stuff, man, good stuff. Any questions on New Zealand yen? New Zealand yen. Trying to remember to write down what pairs we look at in order. That way, when I upload the video, I can kind of put like a little bookmark deal there. All right, so let's go to another one, and let's go to an Aussie yen, right? Let's talk some trend continuation trading, right? And again, there's so many pairs out there today, so I'm probably going to miss, probably some of these opportunities are going to be gone by the time we get to it. But as long as we are providing value, that is all that matters. as long as we are providing value. So Aussie yen, if I get rid of some of the funky notes on here, we are in a very similar situation to all of our pairs with these stinking wicks, but we are not quite at the lows. Actually, let's go to Canada yen first. This has more room, right? Canada yen, right? So if I identify the close right before these wicks, we can identify a zone right down here about 80 cent even, right? This is identify, predict, decide, execute, right? So we identify markets in consolidation, yeah, right? But most recently, we've broken and closed below a previous structure low, right? Would you guys agree? Right? So what I would, you know, I get in the habit of doing this when I do my pre-market checklist. Is I like to really define the trend in two moves, right? So I like because a lot of times in the market, you're going to see like a bigger trend and there's going to be like a smaller trend inside of it. So I'll say like, you know, major trend bullish, minor trend bearish, right? So in this situation, I would say major trend consolidation, but within that consolidation, we're bearish. Does that make sense? Because we're consolidating, no doubt, but within that consolidation, we're bearish. So a minor trend would be bearish, and that just kind of helps me put things in perspective. And again, that allows me to make the prediction. Where is price likely to go? Well, price is likely to go lower. Well, if we're going to go lower, where lower? Where are we likely to go to lower? Well, 80 cent, right? Right at that, right around the closes of the big wicked candle. I feel like we're speaking in like a legend, the big wicked candle. Remember the big wicked candle. We're trading right around the closes of there. There's a good chance that we can go to the psychological number that rests above that. Real quick, we may also have an advanced pattern formation here. Not that it makes a difference, but bat, maybe a little bit short. Hey, yep, a little bit short. Take it back. Bring it back. All right, so I'm asking myself in this situation, okay, well, if we're trading here currently and we're likely to go here, what type of trade am I looking for? Trend continuation trade, right? The way I see it is I've got about 100 pips of potential movement, right? We're right above 81s, right? I'm predicting that we're going to go down to 80, right? Here's 100 pips of movement in here. How can I get a little piece of that, right? How can I get a little piece of that? And automatically I know that this is one that I want to dial down as a day trader. For you guys that took the day trading course, I want to dial down and really get on a range bar chart and say, how can I catch a pullback? There's got to be some type of pullback. I mean, I guess there doesn't have to be. We can see a big elephant candle. But you would think, one would think that between 81 and 80, right, there would be some type of pullback that I can take advantage of. And if that's the case, that's what I want to take. I want to capture that move. So that's my mindset going into this trading opportunity. Real quick, let me just write this down. This is Aussie Canada yen. Canada yen, there we go. Right? So, looking more at a micro level here, down the 240 chart, we can see the market ebbing and flowing, right? Doing what it does. New structure low, outside return. New structure low, outside return, right? We also have one of those candles. Can you guys see it? Can you see it? I've tried and failed to make elephant noises in the past, so I'm not going to attempt it again. But we have one, right? Right in this level, you guys see it? This big candle, this stands out to me, right? So I know that the zone before that candle is going to be important. We didn't quite get there, right below it, but the zone of this candle is going to be important. So as a pullback trader, just like the dollar yen, which I need to go back to, by the way, just like the dollar yen, looking for a pullback into this area and a chance to get lower. That also looks like a 618 retracement too, if my eyes do not lie. And they never do. 618 right on that level. So we didn't quite get to that. All right, so let's continue down to an hourly. Starting to get a pullback on the dollar yen. Believe it or not, this is a positive sign for me. Now, one may say, Akil, why is this a positive sign? Why would you be excited about a potential pullback on the dollar yen here? It's losing you money. You went from up 10 pips to up 5 pips. Why would that be a positive sign? What would be good about a pullback? Not a 26.18 now. Ooh, did I stump you guys? Why is it good to lose money? Yeah. Well, look, realistically, do you think I expected price to go from here, from 109.60s all the way down to 109.20s in a single candle? No. So I always expect the market to ebb and flow, right? I don't mind seeing a natural trend, right? I've been trading long enough where, I'm used to the bouncy bounce, right? Right? So what happens is when we get a little healthy kind of profit taking and then a retest, and hopefully we see some new sellers involved, some more selling interest here, what do we start developing? We start developing a trend, right? What happens when I get a trend? Yeah, I can start managing these stops. I can start taking my stop loss from here to here to here, right? If we just got one straight move, guess what? I can never move based on how I trail stops. I can never move my stops. They're just hanging out there in no man's land. So I don't really mind the trend. Obviously, if this develops into a trend, I don't really mind that. Because if we are going to see a healthy trend, it's just going to provide opportunity for me to manage my stops and reduce my risk. Where, I've had situations where, I've had situations where the market will do this, right? It'll come down here, and then it'll stop and do like this. And guess what I have? Full exposure. Full exposure. So it's a weird way of looking at it, but I think it's a more realistic way. Pound dollar's tickling my orders again and just not filling it. Again, I prefer not to be filled in that, so maybe that's not a bad thing. But all right, so let's go down to the 60-minute here on Canada Yen. We're looking for trend continuation opportunities. Obviously, if you're a lower low, lower close trader, again, very similar to the dollar yen, almost identical where we came up. Rising channel. Looks like we're going to put in a lower low, or we may put in a lower low, lower close here on the hourly. You have 1 minute left. But understand, you don't have to. This doesn't have to be the level, right? This is one that should be available all week. Even though we do have Canada news coming out, right? Our zone, right? You can look to get involved anywhere from this pullback to down here. So even if you can't get the risk reward to work here, if you don't get the trading opportunity, just relax, right? Because we can easily break this level. And guess what you have? Opportunity for a pullback. You break this level. Opportunity for a pullback, right? There's going to be a lot of opportunities on here because we have a big range. So this is one that you want to keep on your radar, in my opinion, all week. You don't want to rush into the trade and be like, I got to take it at this second or I'm going to miss it forever. No. Unless you're someone that wants all 160 pips, no. So just put things in perspective. Wait for your trade. But I would put it on my radar. This would be, and we talk about scanning the market and creating a portfolio that way. I would put this on my radar. And I would pay a lot of attention to it all week, even if you can't get involved in this particular opportunity. So Canada Yen's good. Let's do check it on the range bar. It could be a smaller. This was the initial breakout, the rising channel. You guys can see this rising channel right here. This was the initial break. We may be getting a pullback on the break right now. Canada Yen, CADJPY. George says, I don't care. Patterns have been doing a lot of going below the entry and reversing the hit targets. Yeah. Well, no, and George, it's not as much for me. I don't really care about going below the entry. It's how the market reacted right before the entry. Again, that's the main thing. I got zero problem with patterns blowing through the entry and then reversing. In general, I don't like consolidating before entries or before like exits. Unless it's like consolidating before a stop loss, and obviously I like that. But that just rubs me the wrong way. I don't like to be rubbed in general, but definitely not the wrong way. All right, so here's a look at Canada yen on the 5 range again. For you guys that are new, you're gonna slowly see that I love these charts. All right, here's your rising channel, loss of momentum. Here's your break, right? Boom, big move oversold, massively oversold. Again, the strength, we went oversold right here. Did not reverse, we kept going lower as we broke that 20 line. A good sign would be, what would be a good sign here? What's something I like to use with trend continuation opportunities? Depends who's doing the rubbing. Ask Robert Kraft about that. Oh, too soon. RSI swap. Yep. So a pullback, we get a direct move from oversold to overbought. That'd be a positive sign here. That would be a positive sign. No, I got no problem with Robert Kraft, man. People make fun of him. He's living his best life, man. He's on the back nine, last few holes of life. Lost his wife a couple years ago, I believe. He's just having fun, man. He's got a lot of money. He's got the best dynasty in sports. Do whatever he wants, man. He's not doing anything illegal. He's done nothing illegal, so let him do whatever he wants. He wears Meek Mill chains. Do whatever you want. Do you, Robert Kraft. Live your best life. It's your own life. But people will judge. And I just say to those people who have judged, let's take a look at your own life and see if you're doing everything by the book. Probably not. So yeah, decent opportunity here on the Canadian yen. Any questions on CAD yen? It was funny, before the break we were talking about, I think George was talking about Jason Stapleton's podcasting course. And I was like, George, just tell him you know me. You know who I am. There was a guy, an NBA player, Josh Jackson, who got arrested in Florida because he tried that. He tried to get into VIP. And I'm like, excuse me, sir, you can't get in. He's like, you know who I am. And they're like, no, sir, we don't. And then he tried to get in anyway, and now he's arrested. So it doesn't always work. You gotta know when you can name drop yourself. I can imagine it was an awkward situation. 6'7", whatever, NBA player trying to get into VIP. Come on, guys. I'm Josh Jackson. Who? Who the hell is Josh Jackson? How many of you guys know Josh Jackson? Yeah, get out of here, buddy. I'm Josh Jackson too. Get out of here. It's hilarious. Funnier in basketball. NFL makes sense because you don't see people's faces. Basketball, people, you should know these faces. Speaking of sports, while we're on it, how about, man, great weekend. Premier League came down to a final weekend. How great is that? Meaningful games. Man City. I feel bad for that other team that didn't win. They tried hard. I feel bad for them. I don't. Not at all. Not at all. Oh, now I'm filled pound dollar. All right. Let's go. Let me cross off Canada yen on my list. And let's go. Someone wants to take a look at gold. You want to go gold next, guys? How did the draw against Spurs feel? I didn't really care. It was a pointless game, so I didn't care. I did not care, unfortunately. But I'm overly excited for next year, assuming we don't do anything dumb. I hope we don't lose anybody. I hope we don't lose anybody. I'm an Everton fan, if you guys are new. I hope if we can keep our main core. Ownership's not going to spend any more money. We've done enough of that, so we're not going to be bringing anyone in. I mean, we're looking to bring a few youngsters in actually, but we're not going to be breaking the bank like we did a couple of years ago. I'm excited. I think we've got a good core. We're probably going to lose Zuma, which is unfortunate. He was on loan from Chelsea. We got Mina though that we spent all this money on and never played. So I guess we have someone to fill in, but we still need another defender. Phil Jagielka's on the he's on the back nine of his career as well. But I'm excited, man. I wish we had a pure striker, but you know, I'm happy with who we have. Richarlison is great. Needs to be a little bit more polished. Bernard is amazing. I don't know if you've ever watched that guy play, man. Bernard is amazing. He's got guts. I mean, he brings flair to the game, which is good. Gomez in the middle is strong. He's got a little bit fatigued that the season went. If we can keep Gana Gay, he's solid. I think we're solid. We just need scoring. We need a pure striker. That would be the thing. That's what happens when you lose Lukaku. You don't have a pure striker. But all right, let's go gold and platinum. We'll take a little bit of we'll deviate from the currency pairs a little bit. We'll check out the commodities real quick. Let me load up the view, the trading view. So I'm excited about finishing top 6 next year. Maybe. Now my Philadelphia 76ers, on the other hand, I don't know what they're going to do. That's going to be interesting. All right, so someone asked about gold earlier. Here was the projection we had on gold last week, right? So this is very similar to the euro yen, right? Remember the euro yen earlier? We looked at a double bottom. I'm just gonna erase this stuff real quick. We'll start over. Remember euro yen? We talked about the double bottom here, and we said wait for a break of the highs, right? Well, same thing here on gold. Almost the same exact situation where we had a break, we had a retest, and then we had a continuation up. And if you remember, we had this as well, right? We started doing projections. We had a zone, a bigger zone up here that we were shooting for. If I can find this deal. And we're looking at a 1-to-1 measured move, which I believe we're a little bit short of a 1-6-1-8. It might have been a 1-4-4. We're looking for a 1-to-1 measured move like that. And I think a 1-6-1-8 was a little bit higher, if I remember correctly. Yeah, and a 1-6-1-8 Fibonacci retracement because a 1-4-1-4 was here. So we got that breakout. We got that breakout on gold. So that's why I said that the move that we expected was already made. Now it's kind of back to the drawing board. I do think we can press a little bit higher. We are in that kill zone though. So it would, yeah, we're gonna need it. It's gonna be tough. Let's put it that way. It's gonna be tough, a little bit greedy to expect a little bit more out of this. What would be interesting would be if we ended up kind of flag patterning here. Right, we did something like that, then you can expect to break out to the upside on gold. So it wouldn't shock me if we continued higher, but it's not as clear sailing as it was beforehand. So I forgot who asked about gold, but that was the analysis. And in general, we're doing the same thing kind of here on the higher time frame. We go out to the daily. And again, let me just write down gold. We got to the daily here, right? You can see the same thing. Impulsive move up, right? Would you guys agree? And then what are we doing here? Consolidating. So we're in a bigger pennant pattern here on gold as well. Yep. Pennant, flag, whatever you want to call it, all depending on how you draw your trend lines. Here on gold as well. Now, overall, I'm really on the sideline with gold, and mainly because going even further back in our analysis, we were looking for a move up to this level. And this is the level that we previously consolidated at. Hard to make any type of bigger prediction that we're going to break out higher than the zone, because this is our previous major level of structure, right? If we go out to a weekly, it'll stand out a little bit more to you, right? Here's our previous level of structure. And the last few times we've tested these levels, what has happened? We've held every time, right, guys? I mean, look how long we've been below this line. I mean, really going back to September 2013. So it's a pretty powerful level of structure. However, and there's a little wikis here you got to pay attention to. However, we break this level, right? 1400s. Let's put it a little bit lower than that. Let's call it 1400s just to be even. We break 1400s. I think that would be a big psychological move in the market. And I think we can see a massive breakout, probably up to 1550s. So something to keep an eye on here. But we've got to, until we break this level, I have no reason to anticipate that. But one can make the case, one can make the case that the bigger pullbacks are getting smaller or getting higher. But one could have also made the case here. So it's tough. It's tough. But that was gold, yeah. Let's go to, hey Gabby. Let's go to platinum next. One of our newer traders here got me looking at platinum all of a sudden. About to break out the platinum chains again. Like it's 2000. And platinum, we have a potential advanced pattern formation. If we go back down to 4 hour, I believe it was 4 hour. So here was something on platinum that was on my radar. Nothing major, really, really early, but a potential advanced pattern formation is going to be a potential bear Gartley here on platinum. So while we're here real quick, let me just take a look at a few other things. Silver had nothing on my radar. That's gold again, sorry. Or silver. Silver had nothing on my radar. This was a Gartley we looked at, or a BAT, excuse me, last week. Worked out fine. Congrats to all you BAT traders. You could make the case here, actually. The commodity hour. We could make the case for, is that going to be a butterflies? Okay, not a Gartley. Thought we see a Gartley going the other way. Could make the case for a cipher, actually. So a BAT rolling into a cipher. Look at that. We're looking at an X, swing high to swing low, being our initial anchor leg, X to A. First retracement being our A to B. B to C extending down to our 127. Elephant candle. I told you it was bad, man. I tried. I can't make an elephant noise. And then a cipher completing up here at the 786. It was supposed to be an elephant. Like I did the arm motion. You guys couldn't see it, obviously. Yeah. No. Okay. Whatever. You guys are jealous. Go ahead, you try it right now. You try to make elephant noise. Do it as loud as you can. Let me hear your elephant noise. About 3 of you guys are about to get fired from your job. George, what was that? Shoot. Shoot. uh, Elephant noise. Yeah, there we go. Greystone will be the judge. Greystone will be the judge. Cody says, "Baby girl's looking at me like, what the hell is that, Dad?" Yep, you've already ruined her for life, Cody. You're welcome. I've ruined my kids too, so don't worry. All right. The DAX was an interesting place. This is another situation. This was a situation where we have a pullback. I don't believe in a follow through. So we isolate this level of the chart. This is a beauty of a trend, baby, ain't it? Ain't this? Tell me this ain't beautiful. Look at that. Extension, pullback, extension, equal measured move. Oh, baby, pullback, right? Another extension. Looks like another equal measure move, right? We can just even take this small one right here. Boom, boom. Beautiful, right? And we come back into that structure and you're like, oh yeah, buy it, buy it, buy it. However, we zoom out and look left, we haven't violated our previous level of structure. So hard for me to anticipate the trend continuing. So I like the retest of structure. It's just the prediction, right? The whole entire IPDE process. The fact that I can't necessarily make a prediction that price is more likely to continue up than down because we haven't violated that previous level of structure. So you can look for this. You can have all the greatness in the world here where you can say, oh, come up, double bottom, something like that. But without that prediction that we're more likely to go higher, I don't want to be involved in a trade where in order to make profit and not be stopped out, price has to go higher, right? It's common sense, right? It's funny. I never used to do this before where it's like I would take a trade. This is back a long time ago. I'd take a trade, right? I'd buy the DAX, right? And someone would be like, hey, you think price is going to go higher here? And I'd be like, I don't know. Then why are you long? Huh. Good point. Straight reality check. So interesting situation, just not one that is tradable for me. Lastly, we'll take a look at oil. Oil had nothing on it, but we've been following oil for a while now. We're just in straight consolidation. Oil had a big day yesterday. All right, so let's get back to our pair. Oh, actually, writing this down too. Gold, what do? We did gold. We did platinum. We didn't do silver. We did the DAX. All right, and then we'll head back to some of our other pairs. Let's go Aussie New Zealand. I've written down counter trend, potential counter trend trade at structure. So Aussie New Zealand. Let's do it. Dollar Swiss as well is going to be a fun one. Gabber says I'm short New Zealand dollar. Risk-free trade for potential target 2. If price gets up, I've got orders to enter another short. Nice. Nice. Aussie New Zealand. A pair I rarely look at. But we can identify here on the daily that we are coming into a zone of structure. Would you guys agree? Coming into a zone of structure. Probably a 382 retracement as well. Boom. Right? So seeing that we're coming into a zone of structure, should I be looking long or short? You missed a nice, you can catch the recording, Gabby. You missed a nice Gartley 2618 stop and reverse. Speaking of 2618s, how about did that Aussie dollar one do anything, guys? Nope, look at that. Started breaking down on Aussie dollar. This was another one we're looking at a 2618 on. And what did we never, we have a lower low, lower close here. What didn't we get? What did we want to see that we did not get here on Aussie dollar? Never got the higher high, higher close. So again, sometimes waiting for simple confirmation could be the difference between you being stopped out of a trade and you never getting into a trade. Now again, pros and cons, because obviously if this thing would have went like this and shot straight up, right? You may have not been involved anyway. But you guys know me. I'm risk averse. I am safety first. And it's a nice little filter. It's a nice little filter. All right, so we're coming back down to previous level of structure. I know that if we're at structure, I don't want to be short at structure. I don't want to get short at the floor. I don't want to get long at the ceiling. So I am only looking long at this area. So let's go down here. You can see a nice doji candle down there. This is an opportunity. RSI is oversold, right? An opportunity where you're asking yourselves, what do I need to occur down here in order for me to get long, right? We are in that lower zone of structure. Again, I don't have my VS1s on, but I can imagine there would be a nice VS1 level there. And the question you're asking yourselves is, what do I need to happen? Do I need this? Do I need that? Do I need that? And that's the process that you should be going through. What has to happen in order for me to take the trade? And then, of course, measuring out the rest of it, risk reward, all that fun stuff. So keep an eye on Aussie New Zealand if you are a structure-based trader, a counter trend structure-based trader, because we are in that zone where you can look for a structure-based buy. All right, Aussie New Zealand. Let's go to, I did platinum. Let's go to dollar Swiss. Working our way through. Let's go to dollar Swiss, a pair that I have not looked at in a while. But dollar Swiss has a few things happening on it. It's what's happening, right? One, identify, right? So price action has made a higher high, higher close here, right? We've rallied up. We are at a higher level of structure, but we could move higher. But we've consolidated, right? We've consolidated, and then we started breaking below that level. We go down to the lower time frame here on dollar Swiss to 240. And we're seeing a pullback. Now, here's what's interesting, right? If I were to look at this previous level, right, the lows of this consolidation, and I were to look at this line, right, you can see that zone also runs into previous inside structure there, previous inside structure here as well. What may be a good shorting opportunity is if price rallies back into this zone and you're able to get a hold. Could be a good opportunity for a short. We can take a Fibonacci retracement out. You're going to get some 3D2 confluence there as well. So it could be a good opportunity for a short. Now you do have a psychological number right below that in 101. But could be a good opportunity for a short at a retest of this previous level of structure. Heading down to the 60-minute. That's when it starts to turn into junk. 15-minute. Mo junk. Any questions on dollar Swiss? More of a longer term setup, but I want to put on your guys' radar. Any questions on dollar Swiss? Nope. All right. Now we didn't do. Let me just take a quick look. We didn't do Aussie yen, but I told you guys it was kind of the same. You're in the same boat as the other yen pairs. Let me just take a quick look at this. Yeah, same boat as the other yen pairs. Let's do this. Let's do one more New Zealand dollar, and we'll take a break and we'll come back and kind of finish off our session here. Does that sound good, guys? One more. Take our 13-minute break. We'll come back and finish off. Still have euro dollar, pound dollar. Maybe we'll take a shorter break. We'll take like a 5-minute break, perhaps. But New Zealand dollar, On the daily. On the daily. You can see really kind of in no man's land. We have this big wick here. We had a lot of news on New Zealand last week. So we have this big level of previous structure support right here. We do have lower support as well. Now we do have a potential bear Gartley here, right? A big one, if any of you guys are day traders, or not day traders, but traders on the daily time frame or even the weekly. X to A to B right there, B to C, D completion right down there at 64.82s. So a grown trade here, right? 186 pips for target one, 111 pips for your stop loss. That's a bull one. Did I say bear by accident? You guys should be able to. You guys are smart enough. If you think this is a sell, then shame on you. Let's go down to 240. $240. Again, you have this big candle here from last week's news event, which is really going to really screw up any type of analysis for me. So there's really not much I can do here in the 240. Let's bring over to 60. $60-minute chart. Could be putting in a head and shoulders type of situation on the 60. You can see we rallied down, we retraced, putting the head down there. Could end up being a right shoulder. Again, the key would be this break above and close above this line. Not a lot of room to continue higher, but it could be an opportunity. Gabby says bear cipher 66.12. It's going to be a little bit short for me, but check your data. Usually New Zealand data is going to be a little bit different, but I don't believe I hit the 618 or the 127. I'll double check it though. But yeah, so I'm a little bit short here. But again, check your data. New Zealand data and Aussie data are going to be the ones that are that I noticed they're going to vary a little bit per broker. So if you have it as a cipher, if you hit your 127, then you have a potential cipher that looks like this. I'll draw it out. If you don't, then you have a nothing burger. But if you have it, you're looking at an X to A to B, B to C, and then a CD up here at 66.01, right? The 66 even handle. All right, let's go down to the 15-minute chart. 15-minute time frame. And we'll go to 5. Any questions on the Kiwi? AKA New Zealand dollar? Take a quick look on the range bar charts as well. So it's New Zealand hasn't been an interesting pair for me this year. Not at all. So it's all good. Still got love for it. All right, so let's take a break. We'll do a little bit shorter than our normal break. Usually we take a 13-minute break. Let's take let's do like an 8-minute break. And then we'll come back. We'll finish off the day. I just have two more pairs I want to take a look at. But we'll finish that off. And I'll see you guys in a little bit. All right, gang, back for the last part of today's trading session. It's been a busy day. We looked at a lot so far, including the Euro Yen, the Aussie dollar, the dollar yen, the New Zealand yen, the Canada yen, gold, platinum, the DAX, the Aussie New Zealand, the New Zealand dollar. Let's head over to some of the majors now and get the ones that we're supposed to look at out of the way. Starting with the fan favorite, Euro dollar. Euro dollar here on the daily, not much has changed from last week. We still have two potential trade setups. There's a bigger bearish cipher here on the daily. And before that, there is a bigger, or smaller, I should say, potential bear Gartley here on the daily as well, looking at about 113.06. So that's the Gartley pattern. The cipher pattern is going to be a tad bit higher, looking something like this. X to A to B, B to C, and a potential CD completion right up here at about 113.76. So higher time frame euro dollar to potential bearish advanced pattern formations. Heading down to the 240 chart, this is where things start to get sloppy and choppy here on the 240, where actually may be less choppy. So we're seeing some dollar strength this morning. So we did see a lower low, lower close. That may change things around. Before that, it was just a bunch of slop. But let's see if that actually changes things on the 60 here on the dollar yen. Or euro yen, excuse me. Euro dollar. There we go. Third time's a charm. Third time's a charm. And it doesn't. So again, just consolidation here on the 60-minute chart on the euro dollar. Really not too much to go off of. Let's head over to the pound dollar next. We do have an advanced pattern formation here on the pound dollar. However, let's start on the daily first and foremost, get an idea of what's going on. Here on the daily, right, you can see that we had previously our descending triangle. We broke out of that, came back up, put in a higher high, higher close above the level that we're looking to retest. And then we're coming all the way back down. So we're running into a previous level of structure support right around the $1.29 level. However, something to pay attention to is that we have another level of structure support right below that as well. However, here on the daily, it's about $1.28. So it's a fair distance away. We go down to the 240 chart. Gabrielle says 129 is a nice area for a buy. We go down to the 240 chart, and we have an advanced pattern formation. This impulsive leg right here is going to be our X to A, our first retracement, our A to B, our extension higher, our B to C, and we have a CD completion right around 129.32s, 129.32s. So I mentioned earlier I had to get involved a little bit lower simply because this ends up being a max risk trade, which means it's a very large stop loss. It is a very large stop loss. So bull cipher here on 240. And this is a situation as well. I know many of you guys are CTS traders. So say you're not a cipher trader, or say you are a cipher trader, but you can't trade ciphers with a certain risk or a certain risk reward. Even though the risk reward ratio is not that bad in this one. This is an opportunity where if you're interested in that $1.29 level, that lower zone of structure, you can use a cipher as also 3 points in your CTS score. So you can say that I'm waiting for this, this, and this to happen. But because I have that advanced pattern formation, that is also another 3 points to go along with whatever else occurs at that level. So whether it be a oversoldness, whether it be a double bottom or anything like that, you can add points to your CTS score and build that case for entry. Come on now, wake up, tablet. Euro USD, pound dollar. Gabriel says, wait a minute. All right. I feel a question coming on, perhaps. I will give you exactly 1 minute. While I cross off the other things here. That's going to be all that's on my radar. Cool. No. Got to remeasure stuff. All right. Let's go down to 60-minute here on pound dollar. I think I missed a cipher. $60-minute here on pound dollar. Again, you can see the breakout from that zone, and we're really just starting to mosey on down there. Not a lot of move here in the 60. I suppose the range bar chart may give us some activity because I think it's gonna clean up a lot of this mess. So let's head over to a range bar chart here on the pound dollar and see what it shows us. Actually, not too much. Well, here's an opportunity right here. So if you're looking to get short, I'm not sure if we're going to see this on. I guess you would see it on the 15. But here's a good difference between a range bar chart and the 5-minute chart. Again, you sometimes just get little clues here, just gives a better visual of what's going on. So you can see obviously the break and close below structure, and you have a nice retest here, coming back up to that level. A little bit of pain there before rolling over to the downside, but all in all, it's about the same thing as the 5-minute chart, so not too much there. Let's go pound yen, the beast. The beast, the beast, the beast. The beast was a pair where I was looking for a double bottom last night. And we did get we did get a retest, but not a technical double bottom. But looking at this last night, the beast, the pound yen, was trading at previous structure support. Look left, structure leaves clues right in here. We go down to a 4-hour chart. And was looking for, I think it was more in the 60. Yeah, more in the 60, but we'll see it in the 4 here. Was looking for a retest of this structure and an opportunity to roll up into the same kind of situation that the euro yen had. Gabber says, went long at market 240. I thought you said it wasn't an X to A for you. Or is that the recalculation you had to do? So I was looking for this on the pound yen last night. A double bottom right down here. I thought we'd see a long entry after this. Unfortunately, right, in order to have that double bottom, right, we know our rules. I needed to come to this zone. And you can see price just didn't do it. Just never did it. So that took away interest in this pair. I'm not interested in any more longs on this pair. I'm not interested in getting short because we're at structure. So the only thing that would interest me is now seeing a break and close below that 141 level, at 141.20 levels, and then kind of resetting the process here. But hey, look at that advanced pattern formation here on the 15. Oh, and Chris just wrote it in as well. X to A, A to B, B to C. C to D is right down here, 141.45. Look at that, nice. Nice one, Chris. 141.45. So that could come back and be a secondary chance to get involved. Yeah, nice. Come on, Chris. You always got to mention it, Chris. I missed an advanced pattern formation. We'll see if it comes down there before we close the room. If it does, I can get involved. If it doesn't, then I'll have to wait forever. Let me just see. I may have to enter a little bit lower because I want stops below this level. So if initial stops are 22, 18s. Yeah, I'm gonna have to wait a little bit lower to get involved here to keep that 1-to-1. But we'll put them on here. See if I can get filled in the next few minutes before we close things down. And what I'm doing is the ATR base stop is right here at 41.22. I don't want it there. It's just not a smart place, so I'm going to get a little bit below. Because of that, I'm going to have to adjust my entries a little bit lower in order to get that 1-to-1 risk reward. So not bad. Let me just take a picture of this real quick. Well, it's a little too late for that. We'll keep it up there. All right. Excuse me. Chris says any pound Aussie traders also have a bat as well. So let's go to pound Aussie. Now Chris is sharing the ideas here in the room. Pound Aussie, 15-minute. 5-minute. This one doesn't stand out as much for me, but I'm going to measure out. I'll measure it out for you guys. Like that. All right. Yep, we're about to head out soon as well. I just got to do dollar Canada. And that's going to be it for the day. Do dollar Canada. Dollar Canada's got nothing going on either. But dollar Canada here. And I may actually be getting filled this thing. We'll see if it fills me. It nipped my orders. It didn't fill me on pound yen. Dollar Canada. We're just consolidating. Nah, that's it. Consolidation. 4-hour chart, consolidating. 60-minute chart, consolidating. So, are there any other pairs or questions that you guys have for me before we shut things down for the day? Busy day. Usually we have time for some good, ridiculous rants, but not today. Today was mostly spent on the charts. I'm sure we will have time for rants later in the week. And of course, the recording will be posted to you at some point. It typically takes me a couple of hours. I'm going to try and sneak a workout in today as well, although I've got a swollen knee, so I don't know what I'll be able to do. But I'll try to get this thing up for you guys. But anything else, any other pairs you guys want to take a look at? Question, please. Sure. Sure thing, April. It better be good. It better be good. Are you just set a short limit for pound yen, a buy limit? It was a buy. Now I just canceled it because I'm closing down the room, but it was a buy limit. Yep. So a buy limit, that way when price pushed down to that level, it says I want to buy at this particular price point, and then it immediately gets me long. I mean, obviously after I'm filled with spread, it immediately gets me long. Yep. Drew says, I'm sorry I was late to the session. I'm looking for a potential 2618 on gold based off the daily time frame. Yeah, we took a look at gold. I don't see... Are you looking for a bullish or bearish 2618? I can bring gold back up for you guys. Trading view. Let me know. I didn't have any 2618s on my radar. But we were also looking at not on daily, but I can take another look. I can take a look, gold and daily. Boom. So I am not, but I would say this: it's not a. Gold is tough, right? We're forming a pennant pattern, a bullish pennant pattern, which you would expect to break out to the upside, right? You expect it to break out to the upside. However, we have come to previous level of structure here. We have held that level of structure. So there's not really a reason to, there's no proof that we're likely to really break that level. Now, the move that we looked at gold was a break of this level and a continuation higher. And in my opinion, that move has already been made. A secondary opportunity would be a pullback into this. Now, I wouldn't look at it as a 2618 because the breakout and where we've come to has already come. Basically, the move that I would project from this double bottom has already been made. So I wouldn't have any interest in getting involved in a move that has already been completed. But if you're positioning yourself where you want to be involved, if you're anticipating a bullish break from this pattern projection and you're looking for a reason to get involved in this bullish break and you're saying, hey, I'm going to look for a pullback into this double bottom, I'm going to use the 2618 as a way to position myself for a potential breakout, then I think that's a way that you can use to get involved. Does that make sense? But as far as just a general 2618, I wouldn't personally have interest in it because we've already rallied to where I would expect price to go to. So for me, I wouldn't expect price to go there twice before getting stopped out once. Yeah, no problem. All right, I'll shut it down. I'll put the recording up so you guys can review it later. And I'll see you guys on the platform.